Welcome back, folks. Again, this is a discussion about commodities. So take a moment to read this disclaimer. As a reminder, I'm not a CTA, I'm not a licensed commodity trade advisor. Everything that's mentioned here should be viewed in the light of a paper trade only. Okay, folks. June 2017, ICT Mentorship, Index Trading Concepts, Lesson 4, Projected Range and Objectives. Okay, before I get into it, just want to remind you that index trading can be, like anything else, overcomplicated or it can be simplified. And the conversations that we're going to have here, I want you to understand that this is how I interpreted for the last 20 plus years the internal movements of how indices operate and how they operate on a day-by-day basis intraday. There's going to be some deviations from these ideas that obviously will not help us in any way, shape, or form, but these are my general classifications or how I interpret how the daily range should fulfill for indices and index trading. The first is 2-session up close, and the view is typically with the daily and 4-hour institutional order flow should be bullish. The morning trend, or the AM session, typically we'll see a return to a discount array, and then price will rally. The lunch hour consolidates with shallow retracements, and the PM trend runs the lunch hour lows, sell stops, or drops into a fair value discount array, then rallies into the close. Now a little bit about this specific projected range. The daily range could actually go straight through the lunch hour with very little consolidation whatsoever. Depending upon what was the catalyst that sent prices higher, it could be a very strong economic or a surprise to economic news that was released early on. And while we're looking for basically a measured move type event, first leg up in the morning consolidation and a second leg of equal distance seen from the AM session, seen in the afternoon session. Don't be lulled into thinking that if it's a strong bull day that it will consolidate always the entire lunch hour. Many times it can just continuously trade higher through the lunch hour. I'm just giving you a general, kind of like a generic view of how I interpret the price action, how I forecast it, how I think it may unfold. Obviously, nothing's guaranteed, nothing's set in stone, but by far and large, these 8 ways of projecting the range that I'm going to show you in this teaching will pretty much fit the bill on most days. Okay, 2-session down close, just as the opposite of what we just shown. Institutional order flow will be bearish on the daily and or 4-hour chart. The AM trend will return to a premium array, then declines. The lunch hour consolidates with shallow retracements. And the PM trend runs the lunch hour highs for buy stops or rises into a fair value premium array, then declines into the close. Much like we just said as it relates to strong up days, the lunch hour may not see the entire lunch hour consolidate. It can actually trade through the lunch hour going lower, depending upon, again, whatever the stimulus was that set the day off. It could be a very strong economic news was expected to come out and it disappointed. The number was a disappointment, and it could have been a strong disappointment. So therefore, the market's going to discount current levels and just rapidly reprice lower. The impact of seeing these types of days, obviously, this is like a trending day. You want to be focusing on when the daily and 4-hour are bearish, and opposite seen with up 2-session up close days. You want to see when the daily and 4-hour is institutionally bullish. If we are in the middle of a intermediate term or long-term price swing based on what we would see on a higher time frame chart, this is the classic scenario. Now, when we start approaching higher time frame 4-hour and daily opposing arrays, in this instance here, we would be looking for a 2-session down close, or basically a big down day. That down close is high probability until we get to a 4-hour or a daily or weekly discount array. So when it starts trading into those levels, obviously the same thing is said in opposite terms for the 2-session up close. If we're trading in the middle of a swing or intermediate term price swing has yet to complete, and we have not traded up into a 4-hour daily premium array, that scenario should unfold for a 2-session up close day. For a 2-session down close day, this is the criteria we're looking for as long as the 4-hour and or daily discount arrays have not been traded to. So it makes it very easy for the price to expand lower. Okay, now we have AM rally, PM reversal. Institutional order flow is bullish, and this is seen on daily and 4-hour, but it's underneath, for instance, a 4-hour higher time frame premium PD array. So in other words, price has been going up. It's yet to fulfill a completion of a bullish run, but very close to where we are presently, there is a higher time frame premium PD array, and it could be seen on a 4-hour or it could be a daily, but the AM session will start off bullish until it hits the higher time frame premium PD array, which causes the intraday market reversal. The AM trend returns to a discount array, then rallies. The lunch hour consolidates with shallow retracements. The PM trend runs the lunch hour highs, then reverses into the close, or it runs the intraday high, then reverses into the close. So it could create a higher high in the PM session that was seen on the intraday, or it could just simply run above the lunchtime hour and then reverse there. So in other words, it could create a lower high that was formed in the New York AM session. So don't think that it has to create, like as this diagram showing here, a higher high in the PM session relative to the AM session. It could just be a higher high relative to what was seen during the lunch hour, which would create a failure swing on the run into the AM session's high. And the PM trend can resume higher if the AM session discount array that it rallied off of equals a higher time frame discount array. So we could see it recapitalize that same level once it trades down to it in the PM session. They can recapitalize that discount array and send it higher. If there is no higher time frame discount array that's saw price rally away in AM, say for instance maybe it was a 60-minute, okay, or a 15-minute discount array that caused the AM session rally, then obviously we could look for price to continue lower. But if that New York AM session discount array happened to be a 4-hour or a daily or a weekly discount array, or say like an instance of order block that's bullish from a higher time frame, if it trades back down to it in the PM session, it could reverse there and trade higher and resume going higher. The filter is if it's not a 4-hour or a daily or higher than that discount array, expect it to trade through it and go lower. Okay, the AM decline, PM reversal. Institutional order flow is going to be bearish, but it's yet to trade down into a discount PD array on a higher time frame. So prices above a higher time frame discount array from a 4-hour or a daily basis, or even higher. AM trend returns to a premium array, then declines. The lunch hour consolidates with shallow retracements. The PM trend runs the lunch hour lows, then reverses into the close, or it runs the intraday lows, then reverses into the close. So again, like we just said, with the AM rally, PM reversal, this day we can see the lunch hour lows can be violated or traded down, run out the sell stops for any short-term levels created during lunch hour, and then rallies in the PM session. Or the PM session, as shown here, it runs out the low formed in the New York AM session, then reverses and trades higher. The PM trend can resume lower if AM session premium array equals a higher time frame premium array. So everything we just mentioned for a AM rally PM reversal in relationship to what the higher time frame array may be, if the AM session premium array that it trades up to and sells off from, if that equals a higher time frame 4-hour daily, weekly, or monthly premium array, it can be returning back to it in the PM session to recapitalize that same level and then go lower and resume lower. If that's not the case and we don't see that higher time frame 4-hour daily or higher premium array that the New York AM session keyed off of before it dropped down, then we can expect price to continue through and make an attempt to run higher. Consolidation, AM rally, PM decline. Institutional order flow is going to be neutral or it's going to be unclear to you. So if you're ever questioning what the institutional order flow is for a particular market day, and it's not obvious in terms of where we're at relative to premium or discount on daily or 4-hour, chances are we could probably see a scenario like this, especially if there's no real high impact or medium impact news expected during the 10 o'clock hour or later in the day in the afternoon. So if there's a vacuum of any real market drivers, you can expect a particular projected range to unfold. AM trend is going to be seen by returning to a discount array, then price rallies, or after the first hour or the opening range, or expands higher from equilibrium to run London buy stops, or it could be intraday highs for the buy stops. At the time of this recording, this is the actual projected range I used for the June 22nd, 2017 trading day for the SPOOS market, where I sold short at 24.37 and look for the price to trade down into a discount array or reach for sell stops below the marketplace. So this is the actual projected range I used for a live trade example. So you can see how I formulated the idea and used it in a real-time example today for your learning. The lunch hour consolidates with shallow retracements. PM trend runs the lunch hour highs, then reaches for the day's sell stops, intraday sell stops, or it runs the intraday high, then reaches for intraday or London sell stops. Now, obviously, what's the criteria? How do we know which one it's going to do? In other words, is it going to just run the lunch hour highs, or is it going to run the intraday high? That depends on which is a premium array. In other words, if it's a higher time frame premium array that AM session hit, then it's likely that it won't go back up there because they've already defended that level, and it may just want to run the lunchtime hour highs. Now, if the AM session has not traded up into a higher time frame premium array, like an hourly or a 4-hour chart premium array, then the afternoon could run the intraday high and then reverse. The PM trend can simply consolidate into the close after the lunch hour as well. So it can make all the movement in the morning and then just fizzle out and go sideways the rest of the day through lunch and into the close. Consolidation, AM decline, PM rally. This is just the opposite of what we just saw. Institutional order flow again will be neutral or uncertain to you. The AM trend will see price return to a premium array, then decline, or after the first hour of trading or the opening range, price will expand lower from equilibrium to run London sell stops. The lunch hour is going to see consolidation with shallow retracements. The PM trend will see price run the lunchtime lows, then reach for the day's buy stops, or runs the intraday low, then reaches for intraday, or London buy stops. Now, again, as I mentioned in the previous slide, what scenario would you expect? Which one would you look for the PM trend? If the AM session low trades down to a higher time frame discount array, then the New York PM session will only look to run out the London lunch low. If the AM session low, in this case, does not trade down into a higher time frame discount array, then the New York PM session will look to run out the intraday low and then rally. PM trend can simply consolidate into the close after the lunch hour as well, just like we said in the previous slide for consolidation, AM rally, PM decline. Now, when we're looking at this particular day right here, when the market's not predisposed to trade higher with a trend or lower with a trend, this is the classic scenario where you see that tug of war back and forth. This is what you'll see a lot of times in index trading, which makes it very frustrating if you don't understand the mechanics behind it. When there's a strong directional bias behind the marketplace, or the underlying pinnings of the market suggest higher prices or lower prices, do not look for this particular scenario. Okay, this is not seek and destroy, it's simply consolidation. Now, in non-farm payroll, there is seek and destroy conditions in S&P, but generally this type of day will fulfill if there is a lack of trend and lack of news. So as you can see, there's only 8 projected ranges that I use for the S&P, and it makes it very simple to anticipate what it is that I should be seeing on respective sessions, the AM session and the PM session. Now, obviously, the lunchtime hour is the same. It's the same thing across all of them. Consolidation with shallow retracements. The only time that the lunch hour is different is when we see the trending days, the 2-session up close or 2-session down close days, because lunch can actually be active during those days, but it's always going to be relative to what was seen as a catalyst that drove price higher or lower for those respective days. So hopefully this is giving you more insight as to how I interpret projected ranges and how we can look for objectives in price action using stops, because that's what we understand the indices look for. They seek stops, and they, on a higher time frame, can trend, but on an intraday basis, you have to understand it's all about liquidity and where the stops are. It's a trader's market, so therefore they're going to hunt stops predominantly. And until the next lesson, I wish you good luck and good trading.